Woohoo! Thank you everybody for joining, and thank you for the likes. Looks like we have a lot of people watching and a lot of likes already. And we've got a lot of ground to cover, so big thank you as well to the moderators for being here. This is OCTA Tuesday, where we look at all the on-chain indicators, technical analysis indicators, weave in some money flow and some other news to decipher where we're going to go next. And per a lot of the stuff that I see, I have a sneaking suspicion that Ethereum could explode over the coming week or two. And we should have at least another 2 weeks, maybe 4 weeks of Bitcoin bull run left. So nothing but good news. Not slinging hopium, just looking at data. And this data that we look at as well, hate to harp on, but it helped really identify the bottom on January 24th of Bitcoin. And that's when I entered the biggest synthetic long of my life on MicroStrategy. So this stuff works, despite any naysayers, non-believers out there. Let's switch cameras and jump into OCTA. So, first of all, today's story, I'm going to talk about money flow, on-chain, a view into options, Meyer multiples, SOPR, gradients, and a bunch more. We'll also look at some TA charts for some of our favorite cryptos. And we'll touch on some news as well as some details from a fresh interview from Anatoly and Emin as well. The guys behind Solana and Avalanche. So let's jump in. First of all, the institutions are back. This is good news. And per this article, Bitcoin and Ethereum rise double digits over the week amid institutional interest. As you know, we like to follow the money. But we went from 33 to 44K in Bitcoin. And Ethereum also had a big move, I think went up 11% over the week. It's just above 3,100 now, I think, approximately. But we were as low as 2211 on January 24th. That was the beautiful bottom that we like to try to get good at doing bottoms. So let's jump in and look at some more news. This is from Wells Fargo. A little brief look into this. Wells Fargo crypto is like the internet of the late 90s, nearing hyper adoption phase. Now, for a conservative bank like Wells Fargo, they used to be kind of a crypto hater to come out and say this. It's very, very positive news. So I like it. But let's look at what this means actually in terms of the internet and charts and adoption curves and all that type of stuff. So here, it's a bit of a fuzzy little graphic, but it's the best one I could pull. And we are here. The red arrow I added at the bottom is a little dotted line is the crypto adoption and where we are. Basically, we're around 250 million users. The solid line is the internet adoption. And the hyper adoption phase of the internet, for those of you, I remember I think it was in 1995, I got the first DSL in my house, maybe 94, 95, I don't know, I don't remember, but it was bare to get, high-speed internet in place. And it was also very expensive. But that was the internet back then. And as you know, it's exploded. So if anybody's around, has been around long enough to remember the internet of 1998, 1999, you notice everything was extremely crude, nothing like what it is today. And that's where we are. So again, we are so early. And Wells Fargo just figured it out too. So let's look at the drainage story. And in drainage news, there's only 13% of Bitcoin left in exchanges. It continues to go down. Obviously, that is bullish. I think if we get to under 10% of Bitcoin left in exchanges, then that'll be the time when all the people that have waited to get in, the guy, what's his name from, I can't remember his name, waiting for 20,000, telling the world I was going to go to 20,000. They're going to start getting desperate because the alarm bells will go off when we hit 10% left in exchanges. And that means people will start jumping in and FOMOing in. Those times are coming close. 3% more. Very excited. Now, short squeeze. Was it a short squeeze that caused this bump from 43K? No, sorry, from 33K to 44K? No, per this chart from Glassnode, it wasn't really. As you can see, the spike in Bitcoin price was due to just demand, not really a short squeeze. Going by the amount of liquidations on shorts, it was not as high as times in the past. Therefore, we haven't seen a full short squeeze yet. Good news. Now, let's jump and find some more stuff. This is interesting, and I was thinking, this came from Arcane Research. Of all the options traders out there, of all the big exchanges, the Binance traders are still bearish. This is the Bitcoin USDT perp versus long short ratio. And I dug into this a little bit, and a big thank you to Arcane as well for sharing it. But for me, every time the Binance traders are bearish, it looks like they're late to the party. So if you look at the chart here, I tried to add some little red rings. Take, for example, October 2021. They were going hard bearish when the market was exploding. So the black line is the negative put-call ratio, which means they were buying more puts than calls, and the price shot up. This could have been a technical short squeeze, maybe, but you can see they continue to be short, well, more than halfway through this rally, all the way to 68,000. Very bizarre. Then they flipped, and the real red ring at the top, that means they're going heavy long at way beyond, like a week or two after the top of the market, which is a mistake because it just tanked, as we know, over the last 10, 11 weeks. So there we are. So here we are again. Could this be a new contrary indicator? If Binance people are going short, it might be a very bullish sign. So we'll see. But they've been wrong a lot in the last 12 months. So I thought that was interesting. Now, this one is USDC exchange withdrawals, 13-month low. What do we know from this? Basically, a simple way to look at it, when the amount of stable coins and exchange withdrawals hit such a low, it's to be a pretty bullish sign. Now remember, last time we saw such a low level, that was right before the big January rally when Bitcoin shot up a heck of a lot. So again, we will see. That technically is a bullish sign too. So let's look at this one here. This is called a new entity growth. And obviously, lower price of Bitcoin invites a lot of new entity growth. That's all you need to take away from this. People, new entrants to the market come in when the prices are low, but we haven't seen a lot of retail action out there. This is still heavy, probably 80, 90% institutional money coming in here. Now, when you look at the chart here, I added a little purple arrow saying too late to come in. These are people that came in late to the party, circa May 2021. And that was the wrong time because we went into the summer doldrums after that. And then we saw a little spike. The anomaly spike there is probably because of the Bitfinex situation. But recently, just over the last couple of days, we had another spike up. So typically when this happens, it is a good sign, a bullish sign, and not too late to the party. Too late if we have 3 or 4 big spikes way above the price. That probably is too late. So again, this is a good sign, I believe, of an early stage run as we go forward. Now let's look at Bitcoin SOPR. SOPR is simply put the price sold divided by price paid. That's the easiest way to think about it. Now above the line means people are in profit. That's the white line across the middle here. Below the line, that means people are selling at a loss. These are typically tourists, people who don't know what they're doing, people that buy at the top and they can't take any more pain and they say, yeah, I can't do this anymore, I'm out. And we've had a lot of that in January as well. You can see the sentiment on Twitter, the anger, the frustration out there. Again, this is number go up technology, everybody. Just sit tight and wait. It will go up. So the good news about this particular chart here, again, I put in some green arrows at the top. This typically is when the selling into strength happens. People start taking profit, large profits, in fact, because the orange line indicates how much profit you're making on selling on average. And the orange line, when it's under that middle line, means you're selling at a loss. The 2 red arrows there as well. Now, this chart has just flipped positive, and we need, obviously, when this happens, the demand to step in to help the buying side. So we touched on this last week. Clearly, the sellers are exhausted. They sold at a loss already, and this has given a chance for us to move forward. Remember, in Bitcoin, we spend the majority of the time selling at a profit because it's number go up technology, everybody. Real simple. Just goes up over time. You just need to be patient. That's all it takes. And a lot of people don't have that skill, which is a necessary skill for investing. So let's look at the Meyer multiple. This is the easy way to put this, is the value indicator. You can see here I added little red circles. There are 8 of them over the last 13 years. This is another great way to find bottoms. Everybody, you're looking to find bottoms in Bitcoin? Boom, look at your Meyer multiple, the value indicator. When we've only hit this layer 8 times in 13 years, and we're at it now. We're at it twice in the last 12 months. So again, we'll see. This basically talks about the capitulation zones, you could call them, but it's not really that bad, but 20% discounts from the 200-day moving average. And that on a historical scale means we're doing very well. I blew up the actual details behind the oscillator here as well, so you can see them as we go forward. Again, thank you, Glassnode, for this. This is another cool little one here from Glassnode. It's the 14-day gradient. So this is basically the realized price and indicates true and organic capital inflow into Bitcoin. And again, money flow, watch where the money's going. If there's no money going in, the price will go down. It's that simple. And this is the coin that is spent on chain and sold. And it shows you when there are buyers of fresh capital. Now, the steepness of this curve therefore represents a rational baseline for sustainable value growth. Typically, when we see this, it means we'll have bullish action. So if you look carefully at this line here, you see the middle line and then the pink line. The pink line here, sorry, my phone is buzzing. The pink line has just flipped above the middle line, which is extremely good. Typically, when this happens, it'll go towards the target, the green arrow I included, of the orange line above, between the two, pink line and the price line for Bitcoin. Now, what you also see is a divergence. You'll see the pink line ascending upwards and the price action ascending downwards. This is also a very, very bullish sign. And this means, typically, historically, over the next 2 to 4 weeks, we will see bullish price action for Bitcoin, barring any unforeseen event like a war or some other black swan event. So this is, again, more good news. Now, this came from Bloomberg, which is awesome. Big thank you to Sanjay for sharing as well. So amid its advance this week, we saw Bitcoin rising above its 50-day moving average. But we did hit that 45K. Now, for those of you who have been listening to me, I did say once you break 42K, it's fresh air between 42 and 45K. I could go into Coinbase and FTX and look at the sell walls. There was no selling between those two levels, but there is selling at 45K. And when you look at this chart in a little blue cloud, this shows you exactly when we are now overbought. And typically, this is where Bitcoin stops, takes a breather. People had their limit orders in to take profit at 45K. And that basically suggests the rally went too far, too fast. Real simple. Now, we did have a 38% move in less than 2 weeks, which is a very big move. And, taking profits is very normal in this. So big thank you to Bloomberg and Sanjay for sending this. So this key technical level, it doesn't mean we're stopping at 45K. Taking a breather, let things consolidate for a little bit, and then move up again. So let's talk about Bitcoin monthly returns. This is another fascinating chart, which, we always spoke about the importance of being in Bitcoin at the right time. If you missed the best 80 days of the past 13 years, you missed out on 90% of gains. But this one puts everything in clear perspective. So if you look at the green bars here, there's 5 of them over the last 5 years. These are the periods of 30% return over a 30-day window. Okay, so you can see those pretty clearly. But I'd also like to point out the fact that there were other ones as well. There's been 5 of these in the last 5 years for the 30% in 30 days, but we've also had 9 monthly periods with 50% returns over this same 5-year period. And we have 5 periods of 70% gains as well. So again, obviously, when you buy low and you have these explosive gains, you can make very big profits in a low window of time. We made 38% in 2 weeks on Bitcoin just over the last couple of days. So that's an important chart just to keep in perspective. Remember, I always say, be on the train before the big moves and nail the bottoms when you can, as much as you can. So Bitcoin addresses in profit are also at a 1-month high. Obviously, this little move has helped a lot, but the number of addresses in profit, the 7-day moving average, hit that 1-month high. It's about 29 million addresses. And remember, there are approximately 39 million active addresses with a non-zero balance. So from this, you could surmise 75% easily are in profit. Only 25% of holders are in loss. I think it's probably a lot less than that. considering where we are. Now let's look at a simple TA chart of where we are with Bitcoin today, and a refresher of how I look at the 3 steps. So we had our 30K, the first step, which we dipped as far as 33K. So you could say we got close to maybe that 33K first step. It's a fuzzy step. It's not precise, but that's where we had a lot of support in the past. The second step was that 42K, which once we blew through it, it was off to the races, and we knew we'd go straight up to 45K. Now, after that, we have the 47K. I call it the third step, and that is the next area of potential resistance. And after that, if we blast through 47K, we will go to 52K. Now, depending on what happens there, that historically was a heavy resistance level that just had very strong rejections. So we'll see, and I expect a lot of profit taking to happen at that 52K level because it's a pretty obvious one. So it might be a while before we get up there and especially go through it. But once we get through 52, if we do, it's a new all-time high, and that can happen very quickly. Like I showed you in the previous chart, we're talking 1 or 2 weeks and we could be above 68.8 for Bitcoin. So not selling too much hopium here, but just sharing that. Now let's look at the money flows and what's going on. Money flow is back. Woohoo! So Bitcoin continues to lead inflows with $71 million into Bitcoin over the last week. Remember, I showed you you can nearly see the money flow coming into the charts and the on-chain data and the accounts and profit. This is the largest money flow as well since early December. And the last 3 weeks of inflows have totaled about $110 million. Now, volumes in Bitcoin investment products remained low over the last week at about 1.8 billion versus 3.4 billion in the previous week. So we did see a little bit of an uptick in volume over the last couple of days, but it still is quite low. So that tells me there's a lot of OTC happening, a lot of institutional buying. It's not retail because it's not reflected in the actual volume. Now, in other things, just to highlight on this particular chart here, you will see a couple of other altcoins saw inflows. Solana won the week, 2.4 million. Polkadot, number 2, at 2.2 million. But it's important to know as well that Ethereum had a minus 8.5 million outflow, which is kind of staggering. Cardano had a 1.1 million inflow as well, which is positive. And also the year-to-date flows, again, for the alts, Cardano wins a day at average of 7 million. There was a week, I think about 2 weeks ago, where Solana was down, but everything was selling off, so that's normal. But that is winning the day. Remember, follow the money. That's it. Follow the money. Don't listen to me. Just look at the money. That's what I point out here. So let's talk about Ethereum for a second. 3 Arrows Capital, this is from Wu Blockchain, are stacking Ethereum. They picked up nearly $60 million over the past 3 days. And that is a big chunk. That's about 19,000 Ethereum worth, again, nearly $60 million. Why are they doing this? I don't know. Let's have a look at some more stuff. Let's look at the Ethereum futures. This is the Ethereum open interest perpetual futures in contracts on Deribit. This is a multi-year high right now. So when you see that type of futures action and you see 3 Arrows Capital buying a truckload of Ethereum, that is bullish as heck. So I would not be surprised to see Ethereum exploding to 4,000 real soon. But let's look at the chart if Ethereum is ready to rip. So here, if we look at this carefully, you see a couple of things. Sorry for it being a bit of an eye chart, but this is how I kind of look at things. One, I have all the different fib levels for the different support levels and which also become resistance. We are now getting close to the 0.5 fib level, about $3,300. Notice as well, we need to break through that red line going down, which is the 50-day moving average. And then the next is to break through the 200-day moving average, the blue line. And then we'll get to hopefully 3,700. After that, 4,150. After that, new all-time high, 4,800. So that's what a lot of people think will rip real soon based on these numbers and this crazy options action that we're seeing right now. So let's look at the Sol to ETH. Where we are now. This is a pair that I like to look at as well. And you can see here, Ethereum has been strong. And Solana, on a relative basis, as a trading pair, has been weak. And it's back here in this kill zone. You've heard me talk about this kill zone before. It is the 0.036 level. And as ETH runs, which I expect it to run, Solana will rebound faster. That is my guess. So I expect some very, very positive action coming again over the next 2 weeks. Remember, the mothership, Bitcoin, will drive everything. So after that, let's talk about Cosmos. Cosmos is not one that I own. There's a number of reasons for that. In 2022, I want to own less, but this is a beautiful looking chart. Not financial advice, of course, but I don't own it because it has a weak SCP score, but a very good compendium score. But the real value of Cosmos is in the SDK, and the Cosmos SDK, as you guys know, is an open source framework for building multi-asset proof-of-stake chains, such as Luna. But if you look at the blue line, which is 200-day moving average, look at the way this thing has kind of skated along it and bounced off it. Now we're going back up to 50-day. It's pretty clear to me that we will hit $45 in probably a month or less. We'll see. It just looks absolutely perfect and set to skyrocket as we go forward. Not much selling pressure on the horizon, and we should be able to get to that level 45K, which it hit 4 or 5 times in the last couple of months anyway. So Luna, speaking of an SDK from Cosmos, this one is making a nice recovery too. Again, look at the way it's skated off the blue line, which is the 200-day moving average, which I have a little blue arrow there to help guide your eyes. And we are heading back towards the 0.386 level of $65. And then after that, Luna can move very, very fast when it wants to. But remember, we still have that big anchor liquidity problem on the horizon. This is tempering expectations and money into Luna right now. So we're watching that carefully. We are technically 9 days away from this being illiquid, which is kind of scary. Now, switching gears for a second, there was a great interview that just finished. I listened to it live. This was from the Bankless podcast. The Anatoly was there with Do Kwon and Emin from Avalanche. Do Kwon is from Luna, and I like all names, but Anatoly was asked, what does he think about tribalism? So he basically spoke about this, and he calls them movements. He said you need to think about the future that these things will enable and how they will change the world. That's why he is in the game. It's one of the reasons I'm a big fan of this guy, Anatoly. He said crypto is a religious experience for him as well. And he was involved with development projects in the past, for example, open source projects that at the time they wanted to take down Microsoft. And he says they are trying to change the world. And they believe in buying into these ideas in a big way to improve the world and change everything. He doesn't see on-chain competition due to overlapping use cases, but there is some in places like NFTs, but a little bit of competition is also healthy. He's also very bullish for 2022. Let's see what Emin said from Avalanche. Here he is today, live. This just happened. Emin Gunsira, he said, tribalism is not good for the space. We need to stop fighting over the same pool of users. He was talking about developers. He said the folks that do not spend their time on name calling, and those that do spend their time name calling will be the chains that will lose. And those that just focus on building stuff and focus on the 700 trillion market opportunity, that is what they are looking for. And he also said, in terms of his stance around being bullish for 2022, he believes it'll be an amazing year because all the visions are now coming to fruition per all the L1 chains out there. And he says it's going to be a lot better than people expect. So huge bullishness from both Emin and Anatoly from Solana. Now let's look at the Avalanche chart real quick. This is interesting. It did hit 95 today. Obviously, it could be facing slight resistance at the 50-day moving average. That's the red line there that I have the little hammer on. We also had an inverted hammer. That's hence I used a hammer. And this is a candlestick pattern found after a downtrend, and it's usually taken to be a trend reversal. So we'll see. The inverted hammer, again, looks like an upside hammer. That's the way you can always remember when you see it in the candlestick. And we'll see if this holds. Now, note, Avalanche did get rejected off the $95 level. It's now at about 87, and the RSI is quickly approaching overbought. We're not there yet, but it did have a beautiful ride in the 200-day moving average, like some of the other names we looked at as well, over most of January. So Avalanche chart might be running a little bit out of steam. We'll see. But hitting 95 was a clear selling point. And with that, everybody, just as my voice is stopping, thank you all for being here. Thank you for the likes and subscribing. And thank you to the moderators out there in the chat too. See you all tomorrow.